Hey, good day, everybody. This is Dennis Wilborn, founder of Active Trend Trading. This time again for stocks and options swing trade weekly update. This is Wednesday, the 18th of November. So, without any delay, let's get into this week's review. Got some interesting setups we may want to take a look at. So I want to jump right in on the spiders, which is our single non-leverage ETF for the S&P. As you can see, as we look at the spider, we see something shaping up here. We've got an identified level of resistance / support in here. The lower section of this, about the 352 level, is a level of support here. And then the upper level up here at about the 265 level is a level of resistance. We have a couple of telltale signs that may be saying, hey, I'm getting ready for a more significant pullback that would potentially set us up for, guess what? It would potentially set us up for a bearish trade that we could take, but we're not ready to jump on that yet. Now, and what makes me say that? Well, one, I would like to see my TSI, which is crossed over, I'd like to see it continue to the downside just a little bit. One of the things that we can be aware of, since we are getting these crossovers, both on the TSI, looks like the market forecast intermediate is also trying to turn over, is I can look and see, do I get any kind of a retest back up into that body there, or even a little bit higher, but that midsection of today's body might give us an opportunity to take a downside trade. I would do that in one of two ways. I would either buy puts that are probably out about 2 to 3 weeks from now with the anticipation prices are going to fall all the way down at least to the 20, which that would be down about to 249 level from the 248 level or 258 level. So that's about a $9 move. If we fail at the 20-day moving average, I would anticipate a second bounce off of the 50. And then we may just get into, what kind of pattern is this is what you have to ask yourself, what kind of pattern is the S&P turning in? Well, it's doing this little zigzag pattern in a horizontal range. And so it may say, hey, I'm out of here. I'm going to fall all the way to here, which that's almost $30 away. And so that could also set us up for a nice. And so one way to trade that from an option standpoint is we could look at two things. One, we could look at taking a directional put. Two, actually 3 ways. 2, doing a directional debit spread using puts. I would take into consideration moving all the way down here and only do 1 or 2 contracts in a situation like that. Or I could sell some call credit spreads against this as it potentially falls down. So that's one. Let's take a look at the Qs representing the NASDAQ. The NASDAQ, similar type situation. The NASDAQ is basically has bounced up into past resistance. One of the things that you'll notice, NASDAQ, the tech stocks weren't quite as strong as the S&P was. Just got up into the lower fringes of that resistance zone, is now rolling over. Now this seems like it's kind of a little bit classic. Rally attempt, pull back to the moving averages, rally attempt, potential failure, and a drop. Again, still operating within a nice horizontal zone. Anticipate if we drop from here, a couple of ways you can do that. One is I will just go ahead and throw this on here with a trend line. Let's just take the trend line from that low there to that low there. And we'll just extend that out a little bit, because that is a trend, a slight gradual uptrend that we need to be aware of, because it may stop, prices could stop there, or they could stop here, down here at this lower level. So with the anticipation, do we have a signal to the downside yet? Not totally, but we're getting darn close. Take a look at, let's take a look over here at, take a look at the, this is a 15-minute chart, correction, a 78-minute chart. And a 78-minute chart is one where you have a one bar, equivalent bar across the all time frames during the regular market open hour, and look where it might go. I always like to kind of take a look at both other time frames. It's got some good support down there at 281, and it also has another level of support here about 286. Now the question we have to ask ourselves, because we can trade it the same way as we would be planning on trading the S&P, is puts down to this level, about a 5 to just about $10 range, or we could do call credit spreads, and or do a put debit spread. So that's what we're looking at that. And I kind of like this. And then what are we seeing? What were was the weekly charts showing us anything as we were moving? The big thing on the weekly chart, so here, just keep this in mind on the S, because I like to trade the Qs better than I like to trade the S&P. It has a little bit more action, a little bit better patterns. As you can see, got up past to the close to the highs again. What was the momentum doing? It was diverging in a negative fashion. So do we have a signal yet? Not totally, but in a situation like that, you can use this, these highs for resistance. Let me go back to, there we go. You can use these past highs for levels where anticipate that we could fall from there. And last but not least, IWM, the Russell. Russell has been acting stronger over the last few weeks than the other indexes. You can see Russell is also pushed on up to the high of, basically today's high makes a new high, and so we now have a high, larger support resistance zone. We are in a very nice little uptrend. At the same time, though, what are we getting? Similar type patterns. We're getting a TSI crossover to the downside. We're getting not quite, but kind of a not quite a complete rollover on the market forecast. And those of you who are unfamiliar with the market forecast, I'm primarily looking in a situation like this. I'm looking at long-term trend reversals or intermediate-term trend reversals. Those tend to show up more on the market forecast green line, intermediate line. And when they do turn over and it reverses down, it's when it gets, if it reverses down and rolls steeply down towards this line here, which is the positive 80s line, then typically you're going to get a stronger pullback. If it just kind of meanders along, it just basically is telling you, prices are just rolling along, and the prices roll along like this. It's not a, it's more or less a consolidation type pattern rather than a strong move to the downside. If we move to the left, I'll just show you an example of this. Let's move to the left just a little bit, but only on the chart. Earlier in the year when prices started falling back in February, this is a perfect example. See how it topped, fell over, and then fell. When that happens and you get a cross below the moving average, it's an excellent indicator combined with a TSI of when it's either one, time to take profit, and or set yourself up for some downside trades. And so that's what we're looking at. Getting into the, let's dive in here. With the Russell, we have a bearish engulfing of yesterday's candlestick. That is a reversal signal. I'll be looking at any kind of a pullback up into the midsection of that candlestick, about the, let's say, the 177 level, to set up a potential trade to the downside. I'd be looking at doing the same thing as I would with the other two, buying puts out about 2 to 3 weeks, doing some spreads out about 2 to 3 weeks to even 6 weeks, with the anticipation it's going to draw. If it falls back into the same pattern of about 2 to 3 weeks down, then I'm going to be wanting to go 3 to 4 weeks out to do a spread for price actions to come on down. I can draw a line in here, about there. Draw that up. That's another line in the sand. There we go. Where that uptrend line could be a place where we'd anticipate a potential turn, reversal and turn back around. Interesting stuff. And the other one is right down here at the 168 level. So 168 is about, what is it? It looks like it's about $8 away, $7 away. That gives us enough leeway to be able to put some trades on, especially with the advent of the weekly options. And so what I'll leave you with today, guys, that's what we've got going there. One of the things that I have been watching very closely, and one of the things, we closed a couple of positions out today because they had earnings after hours, and one of them was ZTO. Now, ZTO had been very nice to us, very good to us over the past few months. Actually, we started trading ZTO way back over here, and we'd trade it up, and we'd sell. We'd trade it, and then we'd fall back. We'd buy some. We'd trade it up, and we'd sell. Fall back. We bought our last piece right in here. We sold some of it when it got up into the 34 level. So we went from 30 to 34, which is about 7-8% gain on that. Or no, a little bit over 10% gain on that. But we did it multiple times. That really helps you compound your account very much quicker. So what I did today, my personal rule is if I'm not up 10% or more, I do not hold an entity across earnings. And there's a very good reason for that. Earnings is a wild card. You don't know what's going to happen. Nobody can predict the future into what's going on with earnings. As we see, prices got down. So I jumped out near the close today. And I think we had gotten into the trade at about $30, and we got out of it at about $32.80. So about a 7-8% gain on that. Well, what happened after hours? That's something to always take a look at. Let me see if I can call that up. I can show extended hours. And let me paint that. Let me paint those extended hours a little bit. It's not giving me quite exactly what I want here. There you go. So as you can see, this dark side is the after hours. They didn't like, well, earnings, they did not, something about upset the investors, and the sellers came in and sold off heartily to the downside. So in reality, since I got up here at 32.50-ish, and it dropped to 30.50, that's a $2 drop. So I basically pocketed or put away about 6% of profit that I would have had to nurse over here. So how did I do it? I basically had a little bit over 1,000 shares, and so I sold 3/4 of the shares. I sold 3/4 of the shares, and I held on to a small amount. Because what could have happened? It could have flipped up and gone the other way. So right now, if prices open where they are today, I'm at break even on the shares that I own, but I took that other profit off the table, banked it, and away we go. So that's one of the ways I like to trade trade earnings. And the other one was, hold on just a second, CPRT, I think. Let's see if CPRT had earnings today. And the answer to that is they did. So what happened to CPRT? Again, I closed this out. I actually had to close this out for a little bit of a loss. And that's okay. It was within my my parameters. I did not get even close to my stop loss. But look what happens here. Okay, absolutely. After hours, nothing. Nothing happened. So that's one of the things that you just never you just never know what's going to take place. Other entities that we'll be taking a look at. Let me take a real quick look at. I think that there was It was did NVDA have earnings today? Well, this one had earnings on the 16th. Palo Alto Networks had earnings over here on Monday. As you can see, it did make a nice move on. It did bound up. NVDA, I think, had earnings today. If not, I'll just throw it up there. But again, it's a good idea, and again, it's about the protection of capital. I want to protect my capital as much as possible. So if I'm not up 10%, I'm basically not going to risk it. So yeah, NVDA had earnings today, did a little bit better, made a buck more than it was anticipating. However, something in it they didn't like, and so on this one it dropped 20 bucks. And I see that, what is 20 bucks on a? So you can see it's within 10%, but normally, you're going to get that kind of a swing, plus or minus 10% on an earnings trade. On a day of earnings trade is not unusual. Now, one of the things I do like to do with my account is I trade what I do pre-earnings trades, and I trade primarily options on that, sometimes buy the stocks. If it's something you might be interested in, what we do is before earnings, stocks tend to go on a run. And as they go on that run, we can participate in that, and typically we'll have a 5 to 10% profit target on it. If something you might be interested in, drop me a note. We'll get you hooked up on one of our premium memberships, and it's done really well every year because it gives us something. I have a stable of absolutely thoroughbred stocks that I trade earnings on, and you can take advantage of my technical analysis and trade parallel with me when I put in my trades. So again, no guarantee of being profitable, but I do it with great technical analysis that I've been doing for over 20 plus years now. So with that, I'll bid you adieu. Have a great rest of your day, and look forward to seeing you next Wednesday. And if you like having these Wednesday stock and options swing trade video, if you like having one of these, please let me know in the comments. Give me a thumbs up. If you're not a subscriber, subscribe to the Active Trend Trading's Market TikTok website, YouTube channel. Aloha. God bless.